A couple of trade groups recently, and by trade groups, National Association of Realtors, Mortgage Bankers Association, National Association of Home Builders, basically made a statement to the Fed in so many words saying, you guys got to bring interest rates down. Now, this was out a week or so ago. It, for whatever reason, had news for a day and it's gone away. What has the Fed done? Has the Fed reacted? In this video, I'm going to go through it because I think it kind of got brushed aside as news, but I'm going to share with you my thoughts on not just this article, but what it might mean moving forward for mortgage interest rates. Stay tuned. All right, Matt, the mortgage guy, residential mortgage broker, licensed in 48 states. Go to greatmortgagebroker.com if you want to connect me and my team. Today, I'm talking about this call to action, this, letter to the Fed by these trade organizations saying, like, you need to provide some certainty to the market about the future direction of mortgage interest rates. I'll pull up the article. We'll talk through it. So, Mortgage Bankers Association, National Association of Realtors, National Association of Home Builders call on the Fed to provide market certainty about its rate path. So they're telling the Fed, and I'll give you the version that is the simplified version in my head. They're telling the Fed, hey, listen, nobody knows what you're going to do with interest rates. And that uncertainty is causing volatility, which they're right about. The difference between the 10-year treasury and the 30-year fixed rate mortgage over the last decades, if you tracked it, is only about 1.6 to 1.8%. Now, I'll give you some numbers so you know what the heck that means. If the 10-year treasury today is at 4.8%, and the 30-year fixed rate mortgage is at 7.8%, that's 3 full percent, 300 basis points in fancy speak difference. Traditionally, that's only 1.6 to 1.8. So why such the big spread? Well, I'll tell you what. Anybody who knows how this stuff works knows that increased volatility, uncertainty, not knowing what the Fed is going to do makes that spread wider. And so what I think was the goal of these trade organizations saying, provide us some certainty, is they know with some certainty, mortgage interest rates are going to come down. If that spread that we've seen over decades is back to its normal range of 1.6 to 1.8, you can have a 10-year treasury at 4.8 and the mortgage rate's still going to be 6.4 to 6.6. Today, it's 7.8 because that spread is wider because of uncertainty. So let's read through this. It's been a couple days since I looked back at this, but ongoing market uncertainty about the Fed's rate path has exacerbated housing affordability and created additional disruption. So that's them saying, like, rates are higher because there's volatility. We don't know what the heck you guys are doing. So they urge the Fed chair, our boy Jay Powell, to make two clear statements: that the Fed does not contemplate further rate hikes, and the Fed will not sell off any of its MBS holdings. Well, it's been about 10 days since this article, and the Fed hasn't responded, right? Rates have only gone up since this article. So we're not seeing that yet, but in the coming days, who knows? These steps will provide the market greater certainty about the Fed's rate path and its plan for the MBS portfolio and reduce volatility. Like I said, right? We urge the Fed to take these simple steps. The Fed's dot plot of rate projections showed policymakers foresee one more hike by the end of the year. And then here's where it talks about the spread between the 30-year mortgage rate and the 10-year treasury yield is at historically high levels, signaling deal uncertainty about where the Fed is headed, according to the Housing Trade Group. That is correct. Anybody I talk to who knows anything about how all this stuff works knows that this big spread, which is almost 3%, right, is higher than normal because of uncertainty and volatility. So The uncertainty induced mortgage to treasury spread is costing today's home buyers an extra 245 in monthly payments. Interesting that these trade organizations evolved to say, hey, listen, we got enough headwinds, right? This extra 1.5% in mortgage rates, which translates to an extra 250 a month for the average home buyer on an entry level house, is hurting. Provide us some certainty. So stay tuned. We'll see what the Fed does, how the Fed reacts. I, for one, think that the letter is well intended and makes a good point. Hey, Fed, all we're asking is for some certainty. You tell us exactly what the plan is. The Fed will always, always, always give themselves an out. Well, we're data dependent and we're going to wait and see and basically say a bunch of nothing. Well, let's see if they say something. If you want to connect with me and my team, go to greatmortgagebroker.com. Talk to you soon. Bye-bye.